My name is Darren Joseph from HTJ.tax, and we're the team that seeks to demystify the sometimes confusing world of international tax. And today we have the honor and privilege of having another conversation with Mark. Mark, could you introduce yourself?
I'm an advisor to the entire financial industry on CRS, FATCA, and CARF, and I've advised the OECD and the EU Parliament and the EU Commission and the German government, etc. All this is on my website for anybody to look at.
Fantastic. Let's take a deeper dive into the idea of a CASP, a crypto asset service provider. Could you talk more about what is a CASP and what defines a CASP?
Okay, now we start getting more complicated, okay? A crypto asset service provider, which is a financial institution, is an individual or entity that effects an exchange. This is the wording that they use everywhere. Funny enough, they don't define what effecting an exchange is. So then you've got to look at all types of other laws and Webster's dictionary and what is effecting an exchange. So financial institutions holding accounts may not be involved in effecting transactions regarding the assets that they hold. Beneficial owners remain hidden unless they engage in transactions involving those holdings. Under CARF, beneficial owner identity occurs at the time of exchange rather than account opening. So that's why people can open accounts sometimes without. So opening an account is not reportable. It's when you start transacting that. Okay. Now, the RCASP must effect an exchange transaction. CARF, as I said, doesn't define effectuate, but examples that they give of effectuating is acting as a counterparty or intermediary. So dealers acting for their own accounts to buy and sell is effecting. Right. Operators of ATMs are affecting transactions. Exchanges that act as a market maker and take a bid off a spread. Brokers which act on behalf of clients to complete a buy and sell. Individuals or entities subscribing to crypto assets effectively. So effectuate in the dictionary means to do something or make something happen, or is to bring it about. Okay, so RCASP includes making available a trading platform, including software or applications, apps, allowing users to effectuate transactions. So merely providing a bulletin board for posting, buy and sell is not a RCASP, a reporting crypto asset service provider. Similarly, mere creation of trading platform, a trading software is not a RCASP. So the trading platform is not a CASP unless it exits. Now you get deeper into what is a RCASP.
So that's interesting. So RCASP being a reportable crypto asset service provider. What is an example or what instances someone can be a CASP but not be an RCASP?
Okay, so if you're providing, this CASP means crypto asset service provider, and you ask what is a reporting crypto service provider. The reporting CASP is one that effectuates the change, the transaction. We're talking about the transaction. One that helps make the transaction happen. As I said, an exchange is a CASP when you open an account, but if there's no transaction, there's no reporting until there's an exchange, okay? Right. So CARF states an individual or an entity may be RCASP if it functionally provides a service as a business. This is the other thing. They must do it as a business, effectuation exchange, okay? So if you do it for nothing, you're not in the business. The scope of RCASP may veer to capture parties involved with relevant crypto transactions. Why does it veer? It's trying to get closer to a RCASP that has better information to the beneficial owner. This aim explains the broader definition of the virtual asset service providers under AML. So people often ask, what's the difference between a VASP and a CASP? And I've written some articles on that. And a VASP, according to the FATF, is wider than the CASP, and such as providing advice or portfolio management. CASP fulfill the CARF due diligence. And if they do the due diligence in another jurisdiction, they must register on the CARF registration portal in the jurisdiction that they're in. They can't escape by saying, we'll do the activities outside. For instance, affecting transactions through branches. Because, the next question will explain why they're going after you if you're affecting exchange in another jurisdiction. The question will be, who is pledged to implement it?
Right, so I'm just thinking before we go to that, the idea of the, I guess, put participants in the value chain is to somehow ensure that they can legally avoid being categorized as an RCASP.
The RCASP will try escape the jurisdiction that has implemented a CARF. So if you try escape that, you're probably still going to get caught through a branch or where you are, where you're tax resident, etc. You know, I don't know about where Binance is registered.
That's a good point. You know, there are CASP that may be jurisdictional agnostic. They're not based in any one jurisdiction. How do the rules contemplate exchanges that aren't based anywhere, or individuals who may not be resident anywhere?
Definitions, quite a big section of the beginning of CARF. When are you a reporting CASP? And then they start talking about being tax resident or managed or located or etc. So I think, do you have a nexus? They give a whole lot of nexuses that you could be. Switzerland was the first country to come out with a full legislation.
Which country was this? Sorry?
Switzerland. Yeah, a couple of months ago. And they really are going after other jurisdictions that are using Switzerland somewhere in the chain, and a branch or a wallet. And so Switzerland is being quite strict. You must register with us and you must tell us where you are reporting. And if you're not reporting somewhere else, you must report here.